Internal control. Internal control is often seen as involving certain checks and procedures to prevent direct financial fraud or misappropriation of assets. They are sometimes also seen as mere accounting guidelines. But nowadays the concept of internal control has undergone complete change. It is now defined to include various methods and procedures to safeguard the assets of an organization, to ensure that accounting and statistical data produced are reliable and accurate, ensuring greater efficiency in operation. Limitations of internal control. Controls must therefore be practical, useful, achievable, and compatible with both operating and control goals, and there is always a trade-off between cost and benefit. Since all controls cost resources in terms of money, personnel, equipment, and time, internal controls always imply a trade-off between the anticipated cost and benefit envisaged. This model requires management to identify what needs protecting, what the risks are for those assets, and the level of cost impact and probability for each risk. The organization must do a comprehensive risk assessment before actually designing an internal control system. Any internal control system must ensure that all anticipated risks are taken care of up to the point of cost-benefit analysis. However, this condition may not be strictly applicable to those controls, which are aimed at ensuring compliance with applicable laws and regulations. Evaluation of internal control. The board of directors of every listed company and the following classes of companies, as prescribed under Rule 6 of Companies Rules, 2014, shall constitute an audit committee. All public companies with a paid-up capital of 10 rupees crores or more. All public companies having turnover of 100 rupees crores or more. All public companies having in aggregate outstanding loans or borrowings or debentures or deposits exceeding 50 rupees crores or more. Internal Control Questionnaire. While conducting audit, the statutory auditor will submit to the organization a complete questionnaire for reply by the relevant officials, which will help the former to form an opinion as to the adequacy and reasonableness of the internal systems. The statutory auditor may make do test checks or in-depth checking depending on the circumstances to make sure that the replies to the questionnaires are accurate and complete. In other words, the auditors will use sample testing techniques as a means of validations. Such sampling techniques will vary depending upon the internal control evaluation and results of prior tests. The more testing required due to lack of internal control and lack of accuracy in the accounting records takes additional audit time, therefore increases the cost of the audit also. Internal control and internal auditor. The Committee of Sponsoring Organizations of the Treadway Commission report defines internal control as a process, effected by an entity's board of directors, management and other personnel, which is designed to provide reasonable assurance regarding the achievement of objectives in one or more categories. Components of internal control. Control environment. This is the attitude of management and their employees regarding the need for internal controls. If the controls are taken seriously, this greatly enhances the robustness of the system of internal control. Risk assessment. This is the process of reviewing the business to see where the most critical risks lie, and then designing controls to address those risks. Control activities. This is the use of accounting systems, information technology, and other resources to ensure that appropriate controls are put in place and operating properly. Information and communication. Information about controls should be communicated to management in a timely manner, so that shortfalls can be addressed promptly. Monitoring. This is the set of processes used by management to examine and assess whether its internal controls are functioning properly. Internal auditing. Internal auditing is a function distinct from authorization and recording, which concerns not only with examination of the transactions as recorded in the books of account, but also the appraisal of the procedures. For a better understanding of nature and objectives of internal audit is as follows. Independent appraisal, review and evaluation. Necessity of specialist service. thorough in making study. Ensure complete objectivity. Reporting without fear or favor. Narrow down the gap between management objectives and the efficiency achieved. Assure better management. Look for all-round efficiency. Aid to management. Understanding operational and management auditing. Discuss to find out acceptable solution. Improving internal control. Test for efficiency and effectiveness.